In this video, I cover the SP 500 in terms of technical analysis. We have a look at the wider stock market indices. Are we actually heading for a massive correction now in the upcoming couple of months? Or was this just a brief pause before we move up for one more leg higher? I discussed that in this video. We have a look at the news as well at the moment. Hello everyone, it's Sajat. Hope you're doing really well. So just looking at a couple of the articles we're seeing at the moment, I'm keeping an eye on as well about hospitalization. When it comes to the new variant, you've all probably been hearing about already, and kind of restrictions. So everybody's worried about that with holiday and travel, of course, but also it could be important when it comes to the stock market, not because of the direct effects, but because of the kind of response, particularly from the Fed, Bank of England, etc. And this is a funny article. It says Morgan Stanley sees Fed as greater threat to stocks than Micron. Now, I actually agree with them. I think it's what they do that makes all of the difference. And interestingly, if the Fed is worried and they do things that help stimulate the economy, that's actually really good for the stock market, and that can actually boost things up into an even further bubble, which is kind of what we want before a bigger correction. If there's anything we've learned from the last kind of year or two, it's that stuff like PE ratios mean absolutely nothing. It's just not that type of environment anymore. The way things have been going over the last couple of years, especially in terms of what the central banks are doing around the world. So I wouldn't take this on board at all. I would purely look at the technicals when it comes to this and look at the risk, not of inflation and how much inflation there is, but the risk of what the reaction is to that inflation. I think that's the most important thing. And I think this will be the key for a lot of countries, is the hospitalizations. That's what generally will cause further restrictions when it comes to the economy. And interestingly, when that happens, that's when the central banks become more concerned. That's when you get problems with the velocity in terms of money transfers. And then that's when they start putting new things in place. So at the moment, there's not really any kind of change there. Things are pretty calm. I'm having a look at the kind of data we have here in the UK, where I'm based at the moment. And in terms of recent hospitalizations, there's a bit of a lag and delay with the data. I can't really find any website that has reliable, up-to-date data, to be honest with you. But I mean, this one from the government, again, not particularly helpful, but at the moment there's nothing there of concern, although there is a lag with new cases as well, and then when it comes to hospitalization. But we'll keep a close eye on that. Now, in terms of the actual chart, VIX has been breaking out, but it's done that many times since those March 2020 lows. There's been many times when the VIX has spiked, and generally we just live in a more volatile environment. When you look back here in terms of the history of the S&P, generally things have been a little bit higher than they've been over the last kind of 3 years, and that's kind of normal, again, in my opinion, given what central banks have been doing. But the S&P has been an interesting one in terms of the kind of recent breakdown. This is on a daily chart, and this is the other thing that's interesting. When you have a look at this kind of rounded top that was forming here, you've got a lot of doji candles here. Then you had this massive bearish, almost bearish engulfing candle down, and this is on a daily time frame. But this is the other thing to note as well. These candlestick patterns just don't mean anything anymore either. I think what's more important nowadays, from what I've seen technically, is trend line breakouts, but also important support and resistance levels as well. I think that's been more useful, and I'll show you an example of that in just a minute. Let's drop down onto a 4-hourly. So I was looking back through all of the corrections that we've seen in the SP 500, especially over the last kind of 2 or 3 years. And what we saw kind of happen was we saw a higher high there at 47.40, and then we saw the price break down. What happened was it broke this trend channel, retested this, got this labeled slightly incorrect. That was a good kind of short-in position. I completely missed that myself. But after that, breakdown in price, but then we've got this overlapping structure. And when you're seeing in the S&P 500, when we're at a real market top like we saw back in end of February 2020, what we saw was a quick, swift breakdown. And what we want to see when we see a breakdown is very, very clear impulses down with extension in wave 3s. And here we've not really seen that. You can argue that this is all overlapping 1-2s, but that's kind of rare, or it's a leading diagonal, which is still possible, which is one of the kind of alternative scenarios here. But generally, we're not seeing a fast breakdown. So let me compare it. This is a 4-hourly. Let me compare it to what we saw previously and the corrections we've seen recently. This is the top 20th of February. A nice kind of rounded top forming here that we saw just before the crash. And then what do we see? Clear impulse waves down. Very, very clear. with extension in wave 3s throughout, corrections along the way, and then further extensions. That's what you really want to see if it's the beginning of a massive bear market. So I discussed that in my previous video. I discussed the fact that we are nearing a top. I personally thought we'd move further higher towards the 5,000 mark before we see a top, and then we get into a big bear market that lasts for, I would say, about 3 or 4 months. But looking back at this, it's possible we may have gotten there earlier and it may have begun already. Now, if it's happening, what I discussed in the past video is I think we could move down significantly to like the low 3,000s. To the level I had actually marked off myself is this level here, the high we saw in September 2020, so around the 35.80 mark. That's where I think we can move down. Now, is that happening right now? If you look at the corrections we've seen in the SP 500, there's one in particular I want to show you, which I've got highlighted here, which was the correction we saw earlier this year, the February correction. And can you see it's very similar, where we had a move down and then we have a lot of overlapping price action, which obviously points to it just being a correction in the overall upward trend. So it looks more like we're getting a pause here. Now, in terms of kind of percentages, what were we talking here? Mid-February all the way to the low we saw, which was on the 4th of March, we saw a correction of 6% or so. So what have we seen so far in the S&P? So far from the recent high, what we've seen is a correction of about 5 and a bit percent, 5 and a third percent. So very, very similar. And we're seeing strong price action today with extensions, and we're back above the 4,600 mark. So it's possible this was all wave 4, because it's not overlapping into this area either. It's possible it could have been a deeper wave 4 and now we're moving for a wave 5. That's one possibility, although slightly less likely. But what we can confirm here is it looks like this was probably a WXY correction down. And if that's the case, then, and the corrections ended, the kind of take home message from here is we potentially, if we break out of this comfortably, we should be moving up into all-time highs. For me, I favor that as a higher probability here. That's what I think could be going on. So we may have seen a significant low here and we're moving up. But the way we could be moving up, there's a couple of things that could be going on. Another way you can mark this, there's no way to kind of know for sure until we see what happens with price action. Another way is this could be all a bigger 1, 2, and we're actually moving into a wave 3 of a 5, which could be a very strong move up. What's interesting is I always compare this to the crypto market. The reason I do that, I've been talking about Bitcoin in the recent videos, is there's a good correlation with market tops as well, or corrections with Bitcoin and the S&P, especially when we get a correction. And you can see we've had a bit of a correction in the S&P, but the Bitcoin has absolutely tanked. And I'm not convinced we're fully done here even yet with Bitcoin. But the thing is, if it's already corrected, then the S&P crashes further. Where's Bitcoin going to go to? I feel like already a lot of the correction is done. And even in crypto, we could get a little pause over a week or so, but then we could start building the foundation for a massive move up in crypto and in the S&P. And usually markets, I mean, they head in the direction of the most kind of pain here, really. So that's what I think could be happening. We could still have a rally. We could still have a kind of Christmas rally in the indices and going into January, and then everything kind of turns sour maybe late January, February. And that's when inflation really kicks in. That's when problems might be happening with the pandemic. That's when there's worry. That's when central banks panic. Because it's very easy for the Fed to go and throw money at everything. We know that. What's the only thing that can stop the Fed? As far as I know, the only thing can stop them is when they're forced to stop because of inflation, which is nothing they can control. They cannot control runaway inflation. All they can do is stop basically printing money. Stop buying bonds and stuff like that. That's what I think is going to happen. They're going to get into a position where they're forced to make a change. Everybody's going to panic, and then we'll have a more significant correction, or maybe even a significant market top for the next few years. That's possible as well. Going back to the S&P, if you actually have a look at the fib relationship of this recent correction, we're already at around the 0.5 level. Now, whether we'll move down further, it's yet to be seen. What is the other kind of scenario here? It's possible, although I think it's rare and unlikely, it's possible this was a leading diagonal and we're now just getting a brief pause. So we move back up to previous resistance here, 46.33, before we begin that massive move down. like the one we saw last year in February 2020. I just don't feel that's what's going on in the market at the moment. I don't think there's enough panic or worry. There's not enough rush for the central banks to have to do anything right now. That's why I don't think this is happening. And anything they might do now, like ahead of what they think could happen with the economy, that's only going to help the stock market because it's inflation. And all of this, as I said before, is priced in dollars. So I think that could actually help. Any news out of the Fed or any bit of panic, that's going to help push this market up to all-time highs again. And we're just going to keep playing out the same story until, like I said, I think they're forced to do something that people don't want them to do, companies don't want them to do. And I personally think that's going to be much higher. It's going to be around the 48 to 5,000 mark. That's where we might see that. So we're still waiting on that, in my opinion. But let's see how it goes. I'll do more updates later in the week. Thanks very much for listening.